Hello, warriors. Everyone get focused. How you doing today? Yakubu, nice to meet you. Welcome to our community. I'm Michael Weisman, Sinatra, Kman. I hope you don't have indigestion. Boy, that looked like a good dinner.
Haha,
Lord,
it's been a very long time. Hi there.
Was it all sushi based or
No,
what?
no, 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 no. The guy is a bit of a genius in the kitchen. He had health issues for a long time, but now he's back on top of his game. Seemingly, it was excellent.
So
How's
was that a restaurant then?
Yeah, he's
Oh,
Italian.
oh, nice. Well, I hope, I didn't get to sing to you yesterday, Kman, but I really hope that 2024 is one of your greatest years and, on all levels, not just the markets.
Thank you very much.
Okay, buddy.
I hope it
So,
for everybody as well, and for you
yeah,
as well, of course, Dale.
yeah, everyone hearing our voice, we all hope that for you, everyone in our community. And, people ask me where I learned my coaching style, and it's amazing how television can really influence you. And it's
Wait, you were on
Coach.
TV? I knew
No,
it.
no.
I
Well,
knew it.
yeah, I was for an implant commercial. Anyway, it's Coach and Cheers if you want to check it out. And for guys that want to know how I learned how to interview, it's Ted Baxter from the Mary Tyler Moore Show. So I know that probably, you young people, you don't know it, but they're all out there on YouTube. So let's get to the markets. Why don't we start with the yen and you back in the saddle, K-Man? Did you pay attention last night? Because
Um, I,
this looks like last night.
Yeah, I wasn't up for the Bank of Japan itself, but then I caught like sort of the last bit of Ueda's comments. It's really like as we expected, right? No move. The base case was there, no move, but
Yeah.
commenting on further progress on their normalization to come. So
Uh-huh. Same
yeah,
tune,
sorry.
pretty much. Same song,
Yeah,
pretty
but I
much.
mean, the words have changed a little bit again, just to prepare us even more for what's to come. And but basically, no big changes or no
No.
surprises. Let's put it that way. So, as uh, as the market does when he talks or when they come out with a statement, it moves up and down. It's the yen. It can be volatile. But then you come out of the initial little games and fun, and we're trading somewhere in the middle again. Um, Also, the yen crosses are doing pretty much the same thing as well. They're finding their bits on supports, and but I mean, not
Yeah.
rallying more than what they did, but for sure not falling out of bed. So yeah, I think it's all been relatively as we may expect from a central bank as like Japan, who is going to slowly normalize.
Okay. I just want to point something out. We had that 50-cent down day and silver got crunched yesterday. This 22.5 levels important to get that lower count. But even when we were down 50 cents and, just show you this as first time I've seen this in a while, where you had actually green in some of the silver and gold shares. So they really did not take it on the chin um, the way you would have thought they would, with silver down a ton. So is that enough for me to go all in? No, but it's encouraging for um, something more intermediate term if they could continue that behavior and physical is weak and they start really not being affected by it. So that's that'll be a pretty good tell. And then the only other thing I was thinking of, and I want to get your view. I think that we're close here in AG for some kind of turn.
Not yet. Not yet.
Not yet. Okay, we'll keep it
Wait, wait,
quiet.
wait until I buy back mine.
Okay, what are you waiting for? 85?
85, around 85. There's a lot to do between 85 and 85.20. It feels like a just a slow move lower to retest at 85. There's support here at 85 and a half. And if we can close the day below, then we're probably going to have a look at that 85 again. That's
Okay.
how I look at things. It just feels a little bit better than the euro still. Also, if you look at the cable, although cable has resistance around 127, call it 45, 55 or so, there is a bit of a trend line coming in there, bit of a resistance up there as well. So it could be that for cable as such, it's enough for now. But yeah, euro sterling is still doing pretty good versus quite a few currencies actually.
Yeah.
Also, if you look at the antipodians, it's doing pretty well. If you look at stuff like Swiss as well, it's doing pretty well.
Yeah, I just keep coming back to never sell a sleeping market. And
Mm.
this is it. You're sure it could go another 50 pips or so, but at least be on alert, everybody. So, for a turn, because, I still believe that the dollar, here we are failing at resistance again, but 104 and a half uh, can make sense here, at least for 20 again, 360, 370, and then 70 over 370 is 104.40. So, the case is still there for it to do it. And I just think on this final leg that the pound may finally catch up with euro and underperform the euro on this last wave. So um, that's it. That's about all I have. Blake, Canada. Maybe we still pull back one more time. Maybe the
You
dollar
know,
pulls back one more time.
I,
What do you think?
it's hard to say. I didn't get it yesterday. I missed my order by, I don't know, 7 or 8
Yeah,
pips, and it just took off. And I can't chase it. I'm not going to chase it up here.
yeah,
Although the dollar looks very constructive today. The flip side is, you got the dollar index that's right up against resistance. So it's hard to be chasing the dollar at this point. Plus, you see the price action in like the dollar yen. The dollar yen looks like it is starting to become a little vulnerable up here. I know the BOJ didn't give us a lot to chew on, but I guess Ueda is from what I understand, and I ended up going to sleep before his press conference. From
yeah.
what I understand, he's it's a little bit more hawkish, and the dollar yen actually selling off to the 147 level came down to the what we call channel support. So if you draw a trend
Okay.
line across the bottom, Dale, you'll
Yeah,
get right to that
I could kind
147
of see
level.
it. Yeah,
Yeah,
and so this, we take out 147. There's, maybe
it's
five and a
curtains,
half in it.
curtains. Yeah.
Five and a
And I
half
mean,
in it.
from a price action standpoint, I mean, did he give us enough to chew on? I don't know. That's up for debate. And as you can hear, in Kman's voice, no would
Yeah,
be his opinion. So,
right.
but I think it ends up being more of a dollar story maybe at this point, and that's why the dollar yen really, I think, firmed up off those lows is the dollar took off across the board. Now, one of the things that obviously circulated last night is Bloomberg, and there's a lot of different news outlets that are circulating this big rescue package. And Ryan, I have to hand it to you, Ryan.
China.
You said it yesterday. They've got to do something, right?
Yeah, yeah,
Yeah.
but it doesn't look like it's been enough. If you look at how Chinese stocks reacted,
Right.
split up,
That's it.
down.
Horacio asked in our chat room. He's like, "Hey, doesn't this mean that this is good for Chinese stocks?" And I'm like, "Well, the market's price action tells you it isn't enough, right?"
Yeah, well,
Yeah,
as we said
yeah,
yesterday, they need to fight. They're fighting two battles. They're fighting domestic battle and an international battle. This support may be good for the domestic battle, keep stocks, might keep them afloat. Is it going to send them to all-time highs? Absolutely not. It might just stop the rot. So that will appease some investors in China that they're not losing any more money. But on the other side, it doesn't change anything to do with the international side of things. It doesn't repair relations, doesn't stop the trade disputes, doesn't stop the West being against China because they're backing Russia in the Ukraine stuff. So until that changes, that's where the bigger bazookas will come. Sort out your international relations, get trade back on track, then that helps your economy, and then you get the investors coming back in. But at the moment, foreigners don't want to touch it with a barge pole, and domestic investors have got no choice to.
Maybe, it's been kind of an eroding decline, Ryan.
Yeah.
Maybe we need that, those big days where it's like surrender and you get a big candle and finally a reversal, like a key reversal. I wouldn't buy this until I had a key reversal and the Widowmaker. There are more widows floating around. So if you guys are lonely,
well, that grinding you're talking about, that slow bleed lower, that tells you that that's people exiting the market, not just trading intraday.
Right.
That's every time there's a rally, it gets hit, and more people get out. And maybe it does. Maybe it needs a big flush out, because then you get the bargain hunters coming in. Yeah, the panic, and then all your Buffetts will come in and go, "Thank you very much. That's the low." And when everyone's selling at the bottom, they're buying at the bottom.
We saw some funds and other traders get out of the market. Apparently, we had some news overnight saying that one of the Asian funds, not a really big one, but closed its fund because he played against this move in China and Japan. And that's what I was thinking, that some of these last few days moves are people just getting out of wrong positions that they had done, being like long China, short Japan. Which perhaps a few months ago made sense, but then they are forced out of those positions.
Yeah. Right. Funds are humans too, and they're traders, and traders make that mistake of staying around.
Yeah, but they usually funds based over there, and like Bank of America traders based over there, because there's 20 of them getting the boot as well because they had the wrong trades on. I know that they are what people say, they are retail traders, but just with a lot more money, or not even their own money, to be honest. Yeah, it does look like some of these moves that we've seen over the past days or week may be linked to those people leaving the ship. So we have to be a bit careful, perhaps.
Well, just remember, Kman, funds are people too.
Hey, Dale.
Don't hurt their feelings, man. What?
Dale, guess who's here with us today? It looks like Grega's joining us today. He might have some charts to show people.
Wizard man. All right. Yeah,
hey, Grega's a people too.
Hey man, how are you? I'm gonna stop sharing and let the wizard take over here.
Of course.
By the way, if anybody's not looking, Bitcoin is getting the crap kicked out of it again today.
Is it at 32 yet?
Yeah, no, it's on its way. I'd like to see 36 first and see how we act there. But anyway.
Yeah. And even Ethereum now finally joined this weakness towards 2000, I think.
You think that could be create a correction in S&Ps from here, Grega? Sometimes they run together.
What, with cryptos?
Yeah, sometimes they're like a liquidity deal.
I think that they are unlinked for now, since the ETF was launched. I think that psychological game was there completely different, and that after this massive move to the upside that we have seen on cryptos over the last few months, I think that this is done now, and that maybe money is now more focused on something else. Like, I mean, stocks are in risk on mode, and I think they are going to stay here.
Okay.
So since you mentioned, I mean, stocks, the S&P 500, here are the futures. We are breaking higher to new highs. I think that this breakout could potentially lead us to further gains. So I'm just wondering if the US yields and the US dollar index, which is here on the bottom, will finally came to the downside. So we have to respect that risk on is still here. I'm looking for this movement on US yields to be a corrective. We have a very beautiful ABC so far within this corrective channel. So by the end of the week, I would be expecting a reversal to the downside. And like we discussed already at, let me just look at it, at the start of the month, right? We talked that we are expecting a corrective rally because there on the 4-hour time frame, we had 5 waves down. And always when we have these 5 waves down, right into this end of the year flows, we are seeing a reversal. And so far, this price action, this reversal is still happening. And I really don't believe that this price action, since flows changed here during the Christmas and New Year holidays, will last. I think that we are approaching some very serious and strong resistance up here around to 104 to 104.30. So if stocks will just keep moving to the upside, I just think that sooner or later, even dollar will have to give up. Of course.
And that'll keep propelling risk, right? Because look, the market did okay with dollar strength for a month. So dollar weak, and that should have been a headwind, and it wasn't. Yeah. So dollar weakness will just be jet fuel for the breakout to the upside.
Yeah, so I'm expecting, yes, exactly as you said. So stocks could even accelerate to the upside. And if you look closely here, even if we are in a fifth wave, okay, whenever you have this fifth wave and a wave 3 and an extended like this one here in the middle, then wave 5 can be very similar to wave 1 in distance. Now, this is still far away. I think that 5,000 is a very important round figure as well. And keep in mind that wave 5 is a motive wave, meaning it should be made by 5 waves. So even if I would say the top is here in place, is going to be in place, well, it would be too soon to say that because wave 5 is not in 5 waves. So I think that there is more upside coming here. And as I said, by the end of the week, we could see much higher prices. And that's also the timing when I would be expecting a reversal lower on dollar and US yields. Looking at German DAX, I mean, looks like a very beautiful bull flag, right? We are just testing the upper side of this corrective channel. And more importantly, this price action looks very corrective, which also stopped at the previous swing high. So as long as we are above that supports here, 16,400, I just think that this market could potentially break higher. And eventually this will help, obviously, euro and other major currencies to come to the upside versus US dollar. Looking at pound, now pound is very strong compared to others. Even if we consider where dollar index is trading, pound is doing relatively well. So I'm wondering if we can break this trend line finally this week. Then I think that more upside could be here in the cards for 129, 1.3 level in the next 2 weeks. So we're just waiting on this breakout whenever this one could show this week or no. Also, I think that
what could give us a 4 in that instead? You know, down below you have another.
Yeah, scenario. I have another. Yes, exactly. So if let's say the dollar index will see 104.30, 104.50, and suddenly we see more sideways price action here, and this trend line is now not broken, and we drop below 126.60, then wave 4 will be more complex. But what's good about this is that still will be corrective movement, okay? Right. Because the drop and the structure from the highs is not the sharp one. It's already acting very choppy and overlapping. So that's the personality of a correction. And that's something you want to see with an ongoing trend. So I think that this is just a pause within recovery. Of course, maybe the low has been already triggered here. Maybe we'll see another touch to the downside. But that's why I'm saying that this trend line should be important. And if we see a daily close above it, I think that we are going to see more upside here. Also looking at silver, I think that this one came to some very nice levels here. Okay, we have a very big ongoing triangle, still not breaking out. I think that there's very similar price action at the lower side of this range, something similar like have been here the case in December, at the start of December of 2023, when we have also saw this broke to the upside, the failure one on gold. And now when market stabilized a little bit, especially on gold after this fake out, I just think that we have some potential supports here on silver as well. Gold held 2000 level pretty well. It's consolidating. So I think that even if US yields would come to the downside with the US dollar, I think that gold and that silver with this trend line could potentially see some very nice bounce to the upside. Even if we just maybe focus on more like a basic technical analysis, it's still a range until it's not, right? So if the price is not breaking out and if we are at the lower side of the range, we would basically should expect move to the upper side of the range. So we will see what happens here, but I would be looking for that bounce as long as we are trading above 20.70 level. Okay.
You following the miners at all compared to the physical, Grega?
Yeah, I'm following. Yeah, occasionally, obviously, I'm looking and trying to link them if they are coming together. I can prepare and show you some charts for till next time. No problem.
Okay. Yeah.
Yeah.
Because they've been under pressure, way underperforming physical for a long time. In fact, they're closer to levels of when silver was $12 near the COVID lows. A lot of these miners are back near their 2020 lows with silver being here. So just there might be some extreme undervaluation of them.
Yeah.
Anyway.
Okay, that's
well,
it
thanks,
for me, actually.
Thanks for the views, Grega. I'll take over from here. But you know, and I'm gonna say this out loud. I do not share your views on silver. I actually believe silver is gonna break down. You know, big breakouts like that tend to lead to breakdowns. But that doesn't mean that we can't find some support in the near term. Especially you got to, you know, consider and take into consideration gold is holding up pretty well. I mean, that's one thing. Can't ignore that. I can't ignore it, but I still think that silver is going to eventually make its way lower. But one of the things, you know, I wanted to, you know, ask you really quick is, you know, let's go back to these precious metals, and actually I'll just pull up your charts over here, and on ForexAnalytix, guys, you can actually see all the 30 instruments that we have, and you can get some of Grega's counts here. So gold, this is your longer term count in gold. Yeah. You still see it eventually breaking out.
Yeah, I think that we are in a fifth wave, not completing this stage yet, but I think that we are in a very, very late stages of this bull run. I mean, over the past years, everyone was rushing into gold. Everyone called for 3,000, 5,000. And if something is that extremely overcrowded, I just not really sure that's going to be the case. I mean, in December, it was a very nice evidence of what means the overcrowded trade when we have seen this failure break to the upside and then a reversal. But now in the short term, I think that we are in consolidation and that we could maybe with a slower maneuver moving to the upside, but I would not be expecting any kind of aggressive move to the upside. I just think that
maybe... and for me, you know, I'm gonna try to just draw this the best I can with my free hand, but you can see there's that trend line on a monthly basis just really, you know, we tagged it. I would see, or I would think that a break above that high that we saw, what was it, back in December?
2160.
Yeah, 2160. If that broke, this would be an acceleration. This would cause a blow off top type of move.
I mean, probably a lot of stops are also up there.
Yeah.
Because of that nasty spike.
Anyway, but that's how I'm viewing gold. I mean, as long as we're below here and that false breakout maintains, I have a hard time getting bullish it. But anyway, but it's going to have a lot to do with the dollar, right? And you look at the dollar, and the dollar's constructive. We still have this inverted head and shoulder pattern. We've been consolidating above the breakout point. It still, I think, has a little bit more to go. One of the things that's you know, preventing the dollar from really moving right now, well, a couple things I think, is the U.S. dollar Japanese yen. this tried to show a little bit of a reversal and come down to channel support. But also, the Aussie's holding up well with this, this China news. And I don't know how much that's going to linger around. But the Aussie has been performing horribly. And I think that's a, testament to how weak the Chinese markets have been. Even this, this China 50 couldn't get out of its own way despite all of these, murmurings about what the PBOC might do. So anyway, it's an interesting market. Wait, let me ask you guys, do we have any data coming out today? I need to check.
Just the Philly Fed non-manufacturing, Philly Fed services, which is never on a calendar anywhere.
Yeah. What? Let me see. Let me see if I'm gonna pull it up on one of my.
And Kiwi inflation for Kiwi, I think later.
Yeah, that'll be in Asia tonight. Well, right after the New York close. Speaking of the New York close, we have Netflix coming after the close, and Netflix, the stock. I mean, it's been holding up pretty damn well. This is one of those, tech names that's done pretty well. It's going to be interesting to see how Netflix reacts. I'm going to call this one early. I'm going to say Netflix is a great recession indicator. It's going to be one of those one of those stocks. It's kind of like, dollar store, or what are the parts auto parts stores, Dale? O'Reilly's and all those Pep Boys and stocks like that. I think Netflix is going to end up being in the future a really good recession type of indicator stock. When everybody stays at home, they don't go to the movies, they watch things from home, and they keep their cheap, inexpensive Netflix subscriptions, and not go out. I think this is going to be one of those types of stocks in the future, to kind of think about. Anyway, today, real quick, Ryan, what's on your mind today? Because we have the Euro Sterling that's like really pressing support here ahead of the ECB this week. We look like we're really going to break down here. What are your thoughts? Anything that's on your radar?
Yeah, that one's on my radar, down to 85. It could be a decent trade if that 85 coincides with the ECB, and the ECB are a bit of a pushback against these early cut calls. Then that could be a nice confluence of ECB and levels to signal a bounce from that.
I know you can't see it on my screen because I'm going to move it really quick. This green line, I'm just going to shift it for a bit. But that's the 127% extension of the December-January move, comes in at 85 pence as well. So, and it just coincides with all this horizontal support. So as you're saying, this could be really, really critical support in such a pivotal week, right?
Yeah, if the stars align and you get an ECB pushback as we're trading at 85, it's going to give you a decent bounce. It probably should get at least 86 out of it.
Oh, all right. Anything else on your radar today?
No, just watching the S&P, managing my long positions there. I want a nice move above 48.70, start bringing my stop up. And that Poxy Aussie, still long that, and it's still banging its head on that 66 figure. So I want to move above there as well.
Yeah. 50 DMAs coming up. We still have this bear flag that's trying to play, but I'm focusing on this descending channel as well. Good looks. Kman, how about you today? And by the way, your meal, that looked like Michelin star quality meal.
It was
right there. So
it was.
So what's front of mind for you?
Well, okay, we're all looking at that Euro Sterling, and I'm still a bit short. There's an interesting one on there, because if you look at the November into December height of the move, and then you that move down, and you copy it to the one that we are doing now, it's going to give you exactly 85.05 as well. So if those legs are equal, you're down in the low 85s as well.
Got it.
See what I mean?
All right. Hey, well, a lot of confluence
And
there at
that's
85.
yeah, and that's
Shoot, I
exactly
might even
where
end up buying it down there.
that's
You
where
feel
I
like it, huh,
target.
Dale? Dale's like me. I'm gonna
Take
buy
that
it.
stop out first. Now that I see it under just a
Okay.
shade under 85.
Yeah, that would be
Dale,
Back in
lovely.
August.
That
Dale,
would be lovely, so I can take my profits down there.
your Twitter name, you'll live up to it, right? The Forex Stop Hunter. So
Guest hunter.
Minus 3.7 on that Philly Fed from plus 6.3 prior. So a little.
Oh, we're really humming
negative.
along here in the U.S., huh?
That's right.
USA.
Huh?
I was watching.
That's U.S. exceptionalism, exceptionally weak.
I was watching some macro roundtable thing or listening to it as I was doing analysis like yesterday. And somebody said something that I've been mentioning it here for the last several weeks as far as the economic data goes and jobs go. There are a lot of people in the US that are working 2 jobs, and so when you see all this job creation, it's not quality jobs. And I've been talking about this for like the last month. It's like not quality jobs. It's just, like people that are picking up, a couple jobs and shifts here and there. And that's the thing that's scary is that you talk about humming along here in the US. If things go, tits up and we go a little cattywampus here in the US economy, job losses could really pile up quickly because it's not like a bunch of white collar jobs. It's the blue collar jobs that will go, and those will be severed really fast. So if you think about how we could get into a situation where we're losing 250,000, 300, 400,000 jobs in any type of downturn, it could happen quite rapidly. And talking about humming along, it's something that was stuck out in my mind as I was listening to this roundtable. I'm like, dude, duh, like everybody should understand that. And it should be widely understood. Anyway, I know you have a guest here. I want to thank Grega for showing your looks. And remember, if you guys want to get Elliott Wave looks on 30 different instruments, you can do it right through here through ForexAnalytix. Make sure you're checking out the trader funding program. A lot of people are want to be able to not risk their own money and risk somebody else's money. So and trade larger accounts. So you can actually do that through the trader funding program, which includes you in ForexAnalytix community for a period of time based on what account you look to take an assessment for. And ForexAnalytix, remember, try it out. It's $1 for 10 days. And you can be inside of our community, be chatting with me all day and Ryan and Kman and a lot of our other traders. Grega pops in there and gives us his views several times a week. So with that being said, I know you have a guest, Dale. I want to thank Grega for joining us today. Kman, once again,
Thanks,
happy birthday. And Ryan, thanks for being here. And congratulations to your boys for being scout leaders.
Cheers. Thank you.
Wow, congratulations, Brian.
Thanks, mate.
The apple doesn't fall far from the tree, man.
I don't know. My apple rotted years ago, mate.
Hey, Kman, great to have you back. Thank you, Team Blake. Some great looks today. What a great webinar. I'm telling you, I'm being objective. Really a great webinar every day. I like listening to it. So anyway, we have Don Dawson with us. Don does a lot of work on, what's the name of the site again, Don? Big Charts. Don, how are you? Welcome back to F.A.C.E.
There we go. Should be unmuted now.
You are, Don.
Yeah, it's barchart.com.
Barchart.com. I know I've used those charts for decades. Not lately, but Don, welcome back and Happy New Year.
Happy New Year. It's good to be back.
Yeah, what's top of mind going, almost through the first month of 2024.
Crazy, isn't it? The older we get, the faster it goes, doesn't it?
It's a blink of an eye. So what are the stories and narratives that you're taking a look at?
Yeah, I was just listening to the comment on the employment situation, and I agree 100% on that. And another feature of that too, if you look back over like the last several employment reports in 2023, a lot of that growth was coming at government jobs, right? So you're coming into an election year. Why not? Let's fatten that up. Will make the economy look good, with employment going on. But all it really is just new government jobs adding to our deficit more, really, is what it amounts to. Most the government jobs, we got 3 people doing one person's job. So, it's just widening it out a little bit more. So anyway, yeah, employment, when this thing turns south, it's going quick, I believe. Same thing.
And I heard that's one and if you see it and Blake sees it, the Fed sees it.
Yeah.
And that's why, someone I do respect, Fed Guy 12 is saying that the Fed's going to aggressively ease, that the market is not overestimating their dovishness for this year.
Yeah, I'm in the other camp of that, obviously, but
Okay.
Yeah,
that's what makes a market. And
I agree. Yeah.
Do you have some charts and things you want to show us today, Don?
I would just I've just written an article here with bar chart, and if I could just I'll do a screen share here, and I'll pull that up here and show that to everybody.
Great, thank you.
And it was an article on strength in the dollar index, which is kind of counter trend to what everybody else is looking at. But then again, sometimes that's where the money is made.
Okay, would love to see an alternative view. So, you think this rally that we have is going to be more sustained?
I'm looking that way. Yes. Let's see. You should.
Because I was thinking 105, but you're looking higher.
Yeah, I try not to put targets, but I'm just looking for trend is what I try and find. So I'm just really looking for the trend to start up, and that's what I'm sort of interested in.
Okay.
Let's see here. Should be
great count. Definitely not the narrative.
There we go. Okay. Can you see the screen now?
Yeah, I see your cursors on VIX and crude oil. Yes.
Okay, good. So this is the barchart.com website. And if anybody's interested in following some of the articles that I write, I put one out about once a week on different markets, a lot on commodities, every once in a while currencies and dollar and so on. Obviously, dollars have a huge impact on commodity prices. So to get to it, once you get to barchart.com, there's a tab right here called News. And you left click on that. And over here in the left column where the featured authors are, you'll find my name down here, just Don Dawson. You can click right there. And I'll just take you to a tab here. It's got all of my historical articles. I keep them archived in here for us, so it's pretty cool. And I try to write my articles not just on my opinion about the markets, but I used to teach in a school for about 15 years of commodity futures and so on. So I try and do an education of, how I come about my ideas as well as my opinions in the market. So it's a sort of almost like a tutorial, each one of my articles, which you'll see when we check out this particular one here. My prior one was on, Canadian dollar with its fourth quarter weakness and tying that in with seasonal patterns and commitment of traders report and so on like that. That one seems to be working out fairly well. Anyway, if you wanted to follow some of my articles right up here in the upper right corner, just follow this author. They're all 100% free, and they're just email you a link out every time I publish a new article. But the one I'm talking about for this week was U.S. dollar. Well, the U.S. dollar surprised to the upside. And it's basically when I came into it, I started looking at some of the things here. For one, I think when the Fed gave that a pump and dump basically at their FOMC meeting in December, that was a complete 180-degree turn of where they were just in August, talking about inflation is not even close to where we want it to be. And we're still 3.4, right? Not even near the 2% that they want. And everybody's looking at the peak of 9% and we're down to 3.4. But, peaks they're meant to be broken, right? It's like resistance or support in the market. But I have a feeling that we're going to see another run in inflation coming up here. A lot of it has to do with what's going on in the Middle East right now, too. As you can see, with the Red Sea issues going on. I just saw a headline in there this morning talking about container fees for these ships have gone through the roof again. The next you're going to be hearing about is the insurance companies are not going to let these ships go through the Red Sea.
That's already happening, isn't it?
Okay, good. You're already hearing. So, I mean, the same thing happened over when Ukraine and Russia first went into their issue. Those ships, insurance companies, like, there's no way you're going to send those ships up there. So anyway, all that's going to do is just going to start causing like this chain reaction back to a disrupted supply chain issue. And I think that's what we've got facing us. And that what's going on in the Middle East is not looking like it's going to go away anytime soon. So that's why I'm kind of leaning on this. It's almost impossible for the Fed to do 6 interest rate cuts this year 4 even. If they do 1, it'll basically be just to appease the voting public, because that's unfortunately the Fed has become political, even if they say they're not. And it really doesn't matter which party it is. It seems like every party, there's something goes on during an election year, and that's what I wrote about here in the article, was basically just that idea that something happens during election years that makes the economy look a lot better than what it is. Again, fattening up the employment numbers, making them look really good, but yet not going into the details of why the number is the way it is. So,
but maybe we're making these making this run in the market too early. It's happening here,
I
October,
think you're right.
November,
Yeah,
December, January, because what's going to be important is where it's trading or how it's trading
yeah,
late summer.
Yeah, the equity market is doing a shoot first and ask questions later. It's like they just jumped on the momentum and took off with it. And that was a pretty quick run. But if you go and you look at there's a ETF called RSP, which is basically S&P of an equally weighted index.
Yeah.
It hasn't even taken out last month's high, much less made a new high. So this truly isn't a broad market rally. It's that magnificent 7 in the stock market. And that's pretty much what's dragging everything else along. It's like in commodities. Like, for example, if corn starts to rally or wheat starts to get a strong rally, the corn soybean market or whatever will come and just do a sympathy rally is what it is. It's just kind of like, well, then, if wheat's going, corn and soybeans will go up, right? Even if the fundamentals aren't really there. I'm sorry. And oats doesn't have enough volume in it to.
You got to be an old timer to remember the oat market.
Oh my gosh.
They say that's where everyone went at the Board of Trade as they were going broke. They could only trade oats.
It was that or pork bellies, right? Or pork bellies made
that
broke.
Pork bellies made you broke.
But the old saying when the floor used to be, as oats go, the grains go. So, but today there's just no volume in it. So anyway, I'm just in that camp, but I just think the equity market is just, gotten drunk on the punch bowl that was given out, when Powell gave his little speech in December, and this hangover coming up is not going to be good. I mean, when you look at when the Fed funds or the Fed watch tool here, this is part of the CME group, and this thing was way up here in the 70s. I can't get the number down here. Yeah, it was like 75% not long ago, and it's way back down now to like 40-something%. So that's getting rid of the March event coming up right here. So that one was really positive. But now, once we get through March, then May will start to dwindle down a little bit too, and people are starting to realize that we can't cut rates quite yet. So the Fed watch tools.
Are they going to hike this year, Don?
This year, I think they will once, my opinion. I think
hike.
Yeah, hike. Yeah. Oh, hike. I'm sorry.
Hike. 1, 2, 3. You know
what? I would put that just as even of a chance as a cut. But the only reason I think we'd get a cut would be simply a political issue. Yeah. And, just to make it so that somebody has something to stand up on a stand and sit there and go, look, we got lower rates. That means your credit card bill is going to go down. Your mortgage is going to go down. And it's going to take more than one cut to impact that, to make any real impact on your finances. So
a stronger dollar kind of muffled the effect of inflation, where a weaker dollar would kind of increase the potential, at least in nominal terms.
Mm-hmm. Yeah, well, as I was mentioning earlier, commodities are priced in dollars. So if we do see a weaker dollar for some reason, that's only going to make, we got things going over in the Middle East, and then you get a weaker dollar to increase commodity prices. That's going to be a tailwind to higher prices. So yeah, I just don't see inflation going away. I think we'll get ready for the next upswing, and to tell you the truth, we might not get 9% again, but we're not going to be at 3 point something by the end of this year.
So the narrative for a stronger dollar is what? Risk off? Higher yields?
Yeah, definitely the higher yields. Yeah. That's going to be coming too. If you've been hearing about the Treasury this year, there's a bunch of maturities coming due for Treasury products and so on. They're going to have to be reinvested. But to do that, the Treasury is going to have to issue a lot more debt this year than they did last year, which means at each auction, there's going to be more Treasury products available to be sold. And the only way to get more of that sold is to raise rates, or to have higher rates to have people come buy it. So that's going to be some things to be keeping an eye on too. I've already seen, like in the 10-year and 30-year yields on the long end are already upticking. They're not being talked about.
A little bit.
Yeah. So we're starting to see some upticks in that. So anyway, the seasonal pattern, the seasonal analysis on this, on the dollars, which really kind of got me interested in this as well. And this is more research. I like using.
I remember them.
Yeah, I use the seasonal patterns more for a screener of a market that I'm interested in trading in. For example, when I see the dollar or any market doing this kind of stuff of chopping and chopping like this, I just go, I'm not a day trader. I just do swing trades and commodity spreads, for example. But when I see a market that's, for the last 15 years, that's what the black line represents. When I see a market is doing that for an entire month and there's really not a lot of movement, I don't get too excited about it. But what I do like to see is after it's been basing like this, is you get these kind of moves here. If you'll notice February. So February's got a pretty strong upward bias to the dollar, for the last 30 years, 5 years, and 15 years. So that's a pretty significant move coming up in February. And so we're getting pretty close to the end of January here. And now it's just going to be a matter, is that going to pan out for us again this year? The interesting correlation with that is with February having an uptrend in the dollar, this is the 10-year treasury down here, what their 15-year pattern is. And you come back, here's the January timeframe, for January, what the seasonal pattern is. And this is in yield, by the way, not price. So here, look at the yield, what it does basically from that February up until that April timeframe. We get a spike like that. Typically, this comes from down here, I'll put it right there, the U.S. government issues more debt to come into the April 15th tax deadline to help pay for tax refunds. Yeah. That's what that pattern comes from basically every year, because obviously the Treasury does not have cash laying around. So the only way they can get cash to pay people back is to offer more debt. So that dollar,
I think that time of year is when we're going to finally have everything that we've kicked the can down on budgets around that time of year as well.
That's what I think is going to be recognized this year, because of the extra debt that's going to have to be issued is going to be I think it's what's going to be the straw that broke the camel's back in this debt issue that we're dealing with. So we've been talking about this how many years? Debt, and I even got to the point where I just got to the point where I was going like, what, somehow we get over it. We'll just print more money and we'll be okay. And I've been saying that for so long. I'm just gotten to the point now. It's like, how much longer can we do this now? So, but anyway, I thought that was an interesting pattern. We got, February, get the strong dollar, which really correlates with higher interest rates. And if we get that coming in there, that's going to be an interesting period with the new debt coming on, a seasonal pattern like this, and a 10-year yield getting that pump up like that just for tax refunds. I think that's what's going to give us an issue. Another thing I like to use.
We're only a week away from February.
Exactly. Oh, another thing to kind of keep in mind, these seasonal patterns, when these seasonal patterns come in, I never use them right to the day, because to expect a seasonal pattern to have an apex like this, exactly on the day of the turn, year after year, is impossible.
Unrealistic.
So what you do is you kind of create a 10-day window prior to that peak or that trough, and then a 10-day window post that. So I use about a 20-day window right there to get this whole move started right here. And then I always go back to price action. If I don't have an uptrend starting, if I'm trying to buy, for example, in a dollar, if I'm trying to buy this, I'm not going to buy anything unless it's in an uptrend. The daily is looking pretty good for a start to an uptrend, and the weekly starting to favor some form of an uptrend coming in too. So we're getting two good sized time frames that are starting to tee up to the upside with a seasonal pattern to the upside. So that's kind of bullish in my opinion. But another tool I like to use with this is, once I see these seasonal patterns in here, I believe like the commercial entities, or like especially in the commodities, when we're talking about the physicals, they play a huge role in the markets. Well, anybody who knows the futures markets were created just for these commercial traders to hedge price risk. And if they got their finger on the pulse of that particular product, right? They know that every year when the demand is, when there's excessive supply and stuff like that. So when you follow their behavior in the markets, you can get a pretty good feel when they're starting to get aggressive at buying something or aggressively selling. You usually don't want to argue with that. On the other side of that is to manage money, which is typically your trend followers. So I'll keep an eye on them as well, because they can move the market quite a bit with a lot of money they have. And if we get an uptrend on the managed money side with the dollar index, I'm going to go like, okay, that's good to know. But here's one where the commercials, for example, down here, the Commitment of Traders report, and this is a weekly chart, by the way, of the US dollar index. Down here, what I pointed out was this is a 1-year look back. And that's what I kind of like to use as a gauge, because if you look back an entire year, that kind of puts anything that happens throughout a year seasonally, whether it's tax refunds or year-end repatriation in September 30th for the government, stuff like that. It's all baked into a whole year. It's not just 3 months or 6 months, but I'm looking at the whole year. So what we're seeing here is this red line. There's a zero line right here. And if you'll notice, this says negative, but this is the commercial interest in the futures market of this dollar index. but it's a negative number. What that means is they're holding more shorts than they are long. So they're basically net short, the commercial entities are. However, this horizontal line right here is the zero line, meaning if it goes above that, they're going to hold more longs than shorts. But
and they haven't been long the dollar all the way for a year.
Exactly. However, at points, they don't go net long. But if you look,
they're
like this
not as
point
short,
right,
and that's enough.
Yeah, what you're looking at here is they're the least short they've been than at any time in the last 52 weeks, which is the same thing as saying they're the most bullish they've been in the last 52 weeks. Does that make sense? Without having to go net long. So that's what I'm looking for. And that's where I think people get kind of confused with it. Just because that's a negative number doesn't mean they're, really bearish on the market. They were really bearish down here. Over here, they're more bullish than they're bearish. And this is the commercial entities. This could be banks, because this is where swap dealers are built in, along with commercials in the financial market. So this could be even central banks or anybody who's got some longer term views on the U.S. dollar. But the interesting thing is, if you look at this peak that we've had, we've already put the bottom in back in here where we were peaking here. But notice they're not going away. They're still adding week after week. They're still adding a few more, getting rid of more shorts and going more to the bullish side. But look back here, the last time we were at this level, meaning they held the same number of contracts, this was almost an 8% run on the dollar when they were bullish back here. And now we're back up to that same level of being bullish. And the interesting thing is, if you put a trend line from here to here, it's an upslope, meaning we got a higher low over here. So this is a pretty positive picture right here for the commercials. They're buying at a higher level than they did back in July of 23. So that's, to me, it's got.
Does your gut tell you we're going to take out the highs, at 107.20? Would that be a target for you, or what?
I don't use targets, Dale, because I believe in trends, so I use trail stops. So
I got it.
I remember on the floor how the guys used to trade up there, and I didn't trade on the floor, but I visited a lot and got to know a lot of the guys up on the floor. But it was so funny. It's just kind of like anytime a market gets near these kind of highs or something, there was always, and I heard you mentioning stop runners there a few minutes ago, but it's like you can almost see the guys on the pit and they'd be going like, I smell stops.
Well, they had it in their hands.
Exactly. And they would run those.
Yeah,
and the old saying of support and resistance is made to be broken. It's so true in these markets, because if you look at every move, there's only one real top and there's one real bottom. Everything else was a false top and bottom in the entire move. So it's just
a lot of head fakes in this business. Mr. Market's very mean.
Oh my gosh, it's almost like being married. So,
Don, what a great presentation. Really nice, man.
Well, I just want to talk about it. It's a little bit different than most people are looking at, but if
you're like a trading, I don't know, like an attorney. You build your case with evidence. I know you don't want to be, a trading prosecutor. I mean, you come in with all this evidence and some pretty good macro stuff to build your case for what you're looking for.
That's how I put my money. Yeah, that's how I want to put my money on the line. I want to have some, you and I both know we could have all these facts and I can still lose money on this trade, right?
Yeah.
But I want the odds as much in my favor as I can get them. And I'm not looking for perfection, but I just want to put as much in my favor as possible. And for once I see, okay, seasonal pattern, if something's done something for 15 years, it's kind of like if you go up and shake hands with somebody 15 times in a row and 14 times they smack you upside the head after they shake your hand, what do you think they're going to do the 15th time? More than likely going to smack you upside the head again. It's human nature. And when stuff is repeated so much like this, that's when I really think that seasonal analysis comes into play. And now I've seen seasonal patterns fail so bad. I mean, because something fundamentally went totally different this year than at any time in the past 15. But that's another trading signal too, that when you see a seasonal pattern not working and failing, that's a pretty strong move the other way, because there's a lot of people trapped on the wrong side. And when something's broken that bad, markets usually go very volatile in that direction.
You get false breakouts with technicals too.
Going,
you'll have a resistance level, will take it out intraday and close much lower.
Totally agree. But anyway,
Yeah.
I do like just to have some interesting, points for me for confidence to stay with the trade. So I don't want to run the first time it wants to go against me. And I found that these have been pretty reliable tools for me. I like seasonal analysis. I like correlations of seasonal analysis. And really, if I can get a confirmation on the COT, commitment of traders report, this really helps me stay with the trade. Because
Do you have
to me,
any view on miners, on the gold miners, Don? Because they're back. A lot of them are back to COVID lows, compared to what the physical market is doing.
I'll be honest, Dale, I don't track the miners. I hear people talking about, I hear people talking about the miners, and not doing well at all. And people are saying, without the miners, gold can't go higher. It's kind of like the old Dow theory, right? Without transports confirming a new high, it can't go higher. But I don't, I just don't necessarily follow them. I don't do too much in equities to start with, other than index funds.
Okay. All right. I just thought I'd throw it out there. Well, I thank you for what you brought to the table today.
Well, thank you for having me. I enjoyed talking about it.
Yeah, I always look forward to you coming in and bringing some great old school stuff. I mean, I haven't heard of more research for a while, and I encourage people to follow Don. He's a pro. The things he writes about, he puts skin in the game, and so he knows what you're going through when you're trying to look for opportunities. I think he should be part of your intelligence gathering.
Well, thank
And
you
you
very
know
much.
what?
Yeah.
And it's free. That's,
Yeah.
I knew a guy, he was a KJ, and his expression was, if it's free, it's me. That's the kind of world we live in. Don, I was thinking that eventually, I don't know how much further we could go where everything's free. Maybe we're going to have to pay people to read our stuff and listen to our stuff. What do you think? Huh?
Dale,
Will
the
you
way
please listen to me?
the way this world is turning right now, I would not be surprised if that happened.
Yeah, see, someone's like that. How much do you want? How much do you want, Ingmar, for me to talk for another 5 minutes? I'll pay you 20 bucks. Anyway, Don, that was great hanging out with you today, buddy.
All right, Dale. Thank you very much for
I'm going to be following this stuff, and I hope 2024 is one of your best years.
I appreciate that. You as
on the
well.
planet.
Yep. All of you traders as well. Hope everybody does very well this year.
I'll be in touch, and we'll get back together in the spring.
Sounds great. You have a great one, guys.
All right, Don Dawson, everyone. Follow him on barchart.com and read his articles. And it's really a great site, too. They have nice
Hey, Don, I just want to say thank you for joining us today. It's really, really nice to have you here.
Well, thank you very much. I enjoyed coming in.
You got to get him on Trader Summit.
Don, that's not a bad idea. I'll get your information from Dale, and I'd love to have you on Trader Summit sometime.
Okay. All right. Sounds great.
Cheers.
All
sir.
right, guys. So everyone, you could join the team in 18 minutes on the Morning Edge, and hope we've prepped you for the day. If not, tough. Anyway, good luck, and remember, don't just count your pips, count your blessings. I'm just a little bipolar. Thanks you for
Dale.
understanding me. All right, Blake. Take it easy.
You too.
See everyone tomorrow.